Hey there, everyone. Happy Sunday. We have a big week coming up this week in the markets that I couldn't be more excited for. I think some of Friday's sells in anticipation of what's coming up this week, April 2nd. A lot of people excited about it. It's not just me because my daughter's turning 16, my oldest daughter turning 16 on April the 2nd. Happy birthday to her. But we find out about the Trump tariffs. We find out more of what's going on. And I think some of that can be explained with the market sell that we saw. But I think that we also have some volatility up ahead leading up to that day. Potentially some more downward pressure, especially with some of the tensions coming out between Trump and Putin. The market might not like that, especially if it starts to sniff out more geopolitical tensions. So we're going to talk about what it takes to get to the upside on things in the markets, but we're also going to talk about what could happen if we move to the downside, where exactly we find ourselves in good areas of support, where we start to look for a bounce if downward is the direction that we go. I'm ready to trade in any environment in this market. Me and the other panel experts at the Discord as well. You can find the link for that down in the description. Click that, sign up using the code word CASH. It's going to save you 50% off the first month. You get my technicals, you get my analyses. Also, on top of that, you get their technicals, their analyses. You also get the bread bot. There's live trading that also happens through that Discord daily for the markets. You can go over, you can check it out. Advanced charting tools, the products and services are seemingly endless, and it's a top-notch positive community. I'll tell you more about what we have to offer later in this video. In the meantime, let's get into the charts on this. So let me pop up SPY for you. You can see the climb that we went on and the most recent sell-off that we've had in the market that we started. Where did we end up with this peak? That peak happened on the 19th of February, and we sold down since then. Certainly helped out by what we saw from the Atlanta Fed for potentially weak GDP data, and then also that came out more so, kind of doubling down on it, if you will, for the personal income and outlays, PCE. So we still have GDP concerns, we have inflation concerns, tariff day coming up, spiking those inflation concerns as well. Like I said, Wednesday, April the 2nd, we find out more. Is it as bad as we thought? Is it better than we thought? Or is it much worse than we thought? And then, like I said, we also have those geopolitical tensions to worry about, that if something's going to get kicked up with Russia or heightened, escalating, rather than a deal with Russia instead. Now we're fighting with Russia, arguing with Russia, talking about putting further tariffs on Russian exported fuels. That's all stuff that we want to be watchful for the markets. All those things could push us down a little bit further from where we're at right now. So what kind of movement have we made? Well, since that February 19th peak, so far we peaked out a second time on Wednesday, March the 26th, and then had some decent sells since that time, especially on Friday. I said that could be a really wild day for us, and certainly it was. The 8:30 hour, not great. Also, Michigan consumer sentiment, not great for us. Well, if we continue that movement, this is a Fibonacci extension that's on here. It takes the last movement that we had, puts us back up to where we started that upward movement and turn back it down around again. We're right between a 23.6 and the 38.2. The 38.2, which is around 552, could be where we start to see that support. That's this previous low that you have here, but then you also have the 50% Fibonacci extension value about 544 and then 537 below that. And if we look a little bit left to see where we find that choppiness before, we are pretty much at the top of that. The bottom of it tends to be closer to this 537 that we see down here. That one big movement. Now, if things get really painful in the markets, market gets really worried about what's coming our way, maybe over time we see us pushed all the way down to 512. Now, if we look even farther left on this, well, let me show you what that looks like. 512. There we go. That's a good level of zoom. Takes us back all the way to this peak that we saw back in March of 24. The market will be absolutely howling with pain if we see us come back down to that level. And this isn't to sound bearish, this is about preparation. But if we do see it come back down there to that 100% extension that we see, so that it's equal to this movement that we have here, but translated down here to this part as well. So if we do see that, I think that we could really start to see a major area of bounce. Up above that, probably this week, if we do trade down, where we're probably going to trade down to that 50% retracement level, maybe at most that 61.8. We're going to have to watch and see that curtain, that veil that needs to be lifted is April the 2nd. We need to see what happens that day, how the market reacts that day. Now, going forward from here, just a little bit more commentary for you. we get March's numbers coming up here with the inflation reports happening. So this could be a compounding effect that we have to be prepared for. So if we hear that the tariffs are going to be a little bit more strict and more severe than we expected, not only is that downward pressure, but that also means that any excessive buying that we saw in March that pushes up those inflation numbers and companies raising prices on the consumers, for example, passing that on to the consumers in order to have the consumers eat that inflation while the companies still maintain their margins better. Well, that's not great for those inflation numbers that we see. So that can also further infringe on what we see for GDP and the four pillars that I talk about on here for propping up the markets. They hold the market up. One is high GDP, which right now that's in question. Subdued inflation, right now that's in question. Labor market, in question. We get, by the way, that data is coming up this week as well. Between now and April the 4th, we have JOLTS, we have non-farm payrolls, we have unemployment. There's another initial jobless claims in there. So we want to see, has Doge really dug in or cut into those government numbers more than what we've already seen? If that's coming our way, then that can also push up that unemployment number that we see. And if we start to climb near 4.3, 4.4, the market is starting to get terrified of anything above 4.3 because that's where we peaked out the last time. So there's some things to watch. And so what I'm talking about in this channel is not bearishness. I'm talking about preparation for what could potentially be coming our way based on what we see already happening and what confirmatory evidence there might be and what would refute it instead. So if we get those labor market numbers come in, that non-farm stays strong, unemployment stays low, JOLTS puts out good numbers for us, initial jobless claims study for us that labor market still seems to be reasonably tight. If we get subdued inflation numbers for CPI and PPI, or maybe they come in hot, but maybe April 2nd tariff news isn't as bad as we thought, that might do a fair amount to negate some of that damage that those numbers that we would see for those inflation reports would otherwise cause. April 30th, by the way, is our advanced estimate for GDP for Q1, and it's also when we get personal income and outlays for March, which would be the last of that data, at least for the advanced data that we would get, that would be weighing into that GDP number that we would see. So those are the catalysts, at least in terms of those pillars coming up for us, that we want to be watchful for. Keep on in your mind's eye back there on the back burner, kind of stewing in the background, geopolitical tensions, because that's something that can also mess with the markets. I don't think that the market is going to take this thing going on with Putin. If Trump starts to use strong language, starts to make it seem as though things are escalating between us and Russia, the market just, I don't think the market's going to like it very much. I think it's going to be pushing more on the FUD side of things. Let's get back into the charts. So put this up here. Let's talk about to the upside. Let's say things don't go as bad. We have the 20-day, that's this blue line coming down this way. Need to get back up on top of it. That's the first thing. You can see last time we peekaboo just up above it, but then sold back down below it anyway. That means also down below the 200-day. That means we're down in bearish territory, especially when that 50 crosses the 200. You know we're seeing a significant amount of pain. If that were to happen, anytime they have those faster moving averages moving down over the slower moving averages. Moving over to their Qs, what does that look like? Well, right now we're just above the 38.2 for the Qs as well. Based on that same peak to trough that we see back up to the most recent peak, where do we go from here? Again, let's take a look left and you can see the area of chop that we have. Anywhere in here, we're already in the midst of it, and that takes us all the way down to the 618 level, which is about 447 to 448. So we want to be watchful for that. That could bring with it, once again, we could see that pain coming our way. We would be prepared based on what we hear. That could set up how we set up our trades, especially with options. And like I said, if you guys want to see those trades, the link's in the description for the Discord. Go ahead and sign up, or make sure you use the code word CASH when you do. And if you guys don't know about options and want to learn about them, make sure you use the coursework that's down there for Stockmo Academy. Sign up using the code word DOCTOR. Go ahead and grab that bundle over there for technical analysis trading using the bread recipe, which is the same thing that I use. And then also there's an options course there as well. Go ahead and bundle those two courses together. As an educational professional, I can tell you that they're top notch. So where's the one? That one Fibonacci extension level, it's all the way down here, which actually is a fairly coincidental number, going all the way back to October of 2002 up to the most recent peak that we got. That would be this number right here, that 417. Now, mind you, this would be a place if significant pain were to come our way. If the tariff news is worse than we thought, geopolitical tensions keep on escalating, if GDP numbers keep on making it look like we're looking at recession and that pain is coming our way, look for that bounce to happen right around 419. So setting up just early, just in case things go that way, that's what we want to be looking for. Let's talk about the upside of this thing instead now. So to the upside, Got to get back up on top of that 200-day. Didn't get up above it before. And honestly, we can thank a lot of the tech sell-off that we saw. And there's probably a little bit of broadening happening where we see some money going to some other beaten down sectors, looking to diversify away from just a sector that's been bought and bought and bought over time, which, by the way, I stay bullish on NVIDIA. I got my fingers crossed. As a long-term investor, I would love to see it back down under $100 per share. If we do, man, oh man, I think for me anyway, that would be a time, because I can only speak for myself, that would be a time that I would be jumping on that and taking full advantage, maybe with some leap options in order, or leaps, I should say, leaps options in order to take advantage of that ride, that wave up. So there is something else I want to talk about, by the way. I want to show IWM first for the Russell 2000 stocks. And I do want to talk a little bit of a theory I've been kind of kicking around for why exactly we see some of this pain, and some of the plans that we heard coming from President Trump and about the sovereign wealth fund, the Bitcoin strategic reserve, and then what we also see for those altcoins as well. I want to talk about that. I'll get there in just a moment. I would just want to wrap up these technicals. So IWM, I didn't go all the way back to the peak that we saw back here, just this most recent peak that happened around February the 6th and the sell-off that happened. And what does that look like? Well, the one would be all the way down at 175. And if we look left, man, we have a lot of chop if Russell 2000 sells down. Now, mind you, big old fat support right around 193, 192 is the 50% Fibonacci retracement number that we have on this one, just from this most recent movement. I'm sorry, the Fibonacci extension value that we have on this one, Fibonacci retracement. If I was to do that on here, I would certainly go from this trough that we have down here and then put it up to that peak that we have there to see just how far we've sold down so far. And when you do that, we're about the 50% level. Pulling back to the 61.8, I think would be something reasonable to see, especially if we see some pain in the rest of the markets. It will take a lot of effort to see, well, we need GDP to actually rubber band back up to show us some strength. We need inflation definitely down. And then we also need that strong labor market. And then the last pillar, which I didn't mention, by the way, is easy monetary policy. We need all of those stars to align for Russell 2000. And when they do, man, we're going to get some outperformance. This thing's going to be off like a rocket ship. So for me, finding a bottom on this thing, if I can, is going to be hugely important. So Bitcoin, by the way, Bitcoin off the movement that we saw going back to, for this one, about March 2nd from that peak to where we see it right now. There we go. That takes us down to about the 38.2 and then rebounded. We actually need to stay up above 85,000 to be in really bullish territory. I have my nearly 2-year-old daughter out there saying hi to me. Hi, baby. And I got to go play with her after I'm done with this video and I get it out to you guys. So about 85,000 is the number that we want to see. Crossing back down below that is actually pretty critical for us. We need to cross back up over that. We need to cross back up over the 200-day. If we do happen to sell, the one Fibonacci level that we have on here, the Fibonacci extension level around 70,000, puts us around this top of the area of chop. And if we do sell down below that, now a lot of pain if that were to take place, puts us down to about just under 60,000. So mid 50s up to about 70,000. If we were to see it come back to those levels, which again, not saying that it is, but just pretend for a moment that we stayed under the 200-day, that we were not able to retake the 200-day, and we see pain coming to the markets. If we do, potentially for Bitcoin, I think that bottom could be around mid 50s, maybe up to 70,000, right around this sideways movement that we saw that we were stuck in, going from March all the way over until we got to November. That's a long time to hang out there, about 8 months or so, just to do that sideways trading with not much happening before we finally got this most recent pop with the talk of the Bitcoin strategic reserve, the Trump victory, all that. And now trying to answer what kind of risk environment we find ourselves in is kind of messing with us with Bitcoin right now. And we don't exactly know where that money's going to come from for the Bitcoin strategic reserve. But as those questions get answered, we could start to see that pump moving back up to the upside on this anyway, especially if they're looking to get 1 million Bitcoin, taking over a 5% stake in Bitcoin itself. So if US is able to become the Bitcoin capital of the world, crypto capital of the world, that would be something that we watch for. It could be that major price appreciation from here. So long-term bullish on Bitcoin, from, even though I'm talking about near-term bearishness here, long-term bullish actually on every one of these things that I've talked about so far. And that brings us to XRP. I brought up the Bollinger Bands just to show, man, this thing's trading sideways a lot, waiting for that next big catalyst to push it up. ETF talk could be one of those things that if we start to get ETF approval in here, that we start to see that next big pump. I want to break that $3.40 so bad. I want that $5 XRP, then start looking at the next price target where we start to double again. And I think especially if Bitcoin hits its next stride, XRP is going to go along with it, potentially even eclipsing what we see with Ethereum. And the last chart that I think is a lot of fun, this is the monthly chart for TLT, so the 20-year Treasury. We haven't seen Bollinger Bands narrowing like this since unless we go back to the 2018s, and you can see what happened when we just exploded there with that price on TLT going up, and we had a lot of question, a lot of doubt with the treasuries right now. But if we start to answer those questions about the doubt that we have for the U.S. being able to service its debt, we start to see demand come back for those treasuries, this thing's going to be a rocket ship. One thing that I'm really paying attention to is, let me bring this up here for you, not the volume, but the RSI. Look at the way the RSI on the monthly chart is climbing for us. And it's been climbing, let me see this, we can officially say climbing since November of 23. The momentum on this thing just keeps building. I think that moment is coming where we start to take that rocket ship ride and break this 20-month that we've been rejecting off of, going all the way back to December of 23. We need to get back up above that. We have the higher low put in. And so I think our payday could be coming, especially if you're somebody who is bullish on things such as TMF, for example, looking at the 20-year Treasury, triple leverage, and especially if you like options on it because you really like risk. That's leverage on top of leverage. And I'll tell you what, I might be one of those guys that I have that portfolio where I just like to have that fun going for that risk and really looking for those big gains. And if you guys want to see how that happens, like I said, links in the description for the Discord. Use code word cash. Join the thousands of members that are already over there and see me and the other experts, the trades that we do, the technicals that we put out, and the live trading from StockMo, and then also the other live streams that happen over there as well. The bread bot, advanced trading tools, AI tools, you name it. It is huge, it is massive, and it is there waiting for you. And guys, I also mentioned that coursework as well, code word doctor. Now let me wrap things up here for you by talking about the Bitcoin Strategic Reserve and also what we have for the other cryptocurrencies like Cardano, Ethereum, XRP that were mentioned by Trump as well, and then also the Sovereign Wealth Fund. Once again, I've said this before, it's weird to think about starting a sovereign wealth fund while equities are at the top, or cryptos are at the top. What if there was some weakness that came in first? What if there was a bit of pain that caused there to be deals in the market? And who doesn't love a good deal in the market? I know that I love a good deal in the market. So if you are president of the United States, let's say, and you're looking to find some good deals around the markets when you go to start those sovereign wealth funds, and maybe you're going to hold on to equities, maybe you're going to hold on to some cryptos as well. Do you want those assets to buy at expensive levels, or do you want them at cheap levels? So if this economy is being driven like it's been stolen, and now we're looking at kind of going that headlong, reckless direction, and things start to get a little bit wobbly on us, when does that next band come in? That sovereign wealth fund news where that big purchasing starts? When is that going to creep in on us? Well, I think towards the bottom would make a whole lot more sense to start one of those things rather than towards the top. So I don't have any evidence of this. I don't have any proof of this at all. But if I were the one starting a sovereign wealth fund and there were billions, maybe even trillions of dollars on the line for such a thing, I know that buying that cheap is going to make a whole lot more sense than buying it expensive, and seeing markets off their peaks significantly could be that time to do it, especially if it's at that time to really start turning things around. So while no one can really truly time the markets, there's definitely some influence out there with definitely more money than I happen to have. So that's something that I think maybe might tell us a little bit more of what's going on in the background and why things are being pushed as hard as they are. I don't have any facts on that. It's just something that I mull over, something that I chew on as I'm sitting and looking at the charts and thinking about the direction that I would take my overall portfolio in. And just wanted to kind of toss that out there as an idea. So you guys are welcome to hit me up in the comments. Let me know what you think of it. Subscribe to see more of my commentary, see more of my technicals. Come join us over at our Discord. Like I said, links in the description, code word cash. Sign up for those courses, learn about technicals, learn how to trade using the bread recipe, and then also learn about options themselves. Use the code word doctor for that one. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.